SoFi had a great day in the markets today, investors. We're going to talk about where does SoFi go from here and some other stocks I'm adding to my portfolio right now. We got a great video lined up for you guys today, so make sure you hit that like button and subscribe to the channel. Check out your screen right here. SoFi had a great day, up over 3% today. This past week, stock's doing well too, up around 9%. We did touch 18 bucks per share today. We have to love that, right? Over the last month, up 12.73%. And then over the last 6 months, we're still getting obliterated. But it's all good, guys. We are on a path to redemption. Man, year to date, the stock has getting brutalized. But I put out a video a couple days ago on why I think the stock will 2x in the next year. Make sure you check that out. I'll leave a link for that in the description down below. But somehow, investors, the stock is still green over the last year from today. But we're going to get back to those all-time highs very soon, 32.21. We got a little bit of ways to go to get back up there, but I love that. There's a lot of good things going on with SoFi stock right now. And one thing I love is this stablecoin issued by the U.S. National Bank to launch on a banking platform, USD. SoFi coming at you guys. SoFi is the first national bank to offer a stablecoin on a public blockchain. Now allows its nearly 15 million members to buy, sell, and hold SoFi USD, a bank-grade one-to-one redeemable US dollar stablecoin, which makes sending money across different platforms super easy. And speaking of members, the growth is where we're at. It's amazing. We're looking at, around 18 million members by the end of the year. This 30% growth year over year. If we can keep growing 30 to 40% year over year, I love that. Super Bowl is at SoFi Stadium this year, so there's going to be a lot of brand awareness happening with SoFi over the next couple of years. Organic and inorganic growth. I love that. These are some predictions over the next couple calendar years. Between 23 and 24 million, that's kind of where I'm at right now, end of 2027. And then by the end of 2028, we're looking over 30 million new members. Guys, that's pretty much double where we're at right now. So we got to love that. And here's some of the key drivers fueling the next 3 years of growth. The financial services productivity loop. That's SoFi being the one-stop shop for all your financial needs. Cross-selling at most banks are way higher. So the average SoFi customer currently holds 1.5 products compared to 4 to 6 products of these big legacy traditional banks. So there's a lot of headway moving forward because with this cross-buying, there's a lot of opportunity for growth on the top and bottom line there, guys. Ecosystem and new offerings, rapid expansion into corporate banking, enhanced crypto capabilities. Level 1 options is always huge as well. And automated wealth management. And all of these things like options and wealth management, there's always fees. Fee-based revenue is how this bank takes it to the next level, in my opinion, and brand scaling. It's crazy. Only 8% of Americans are actually familiar with SoFi's complete financial suite. That's a lot of runway to be had there just in the United States alone. So I'm excited for the growth moving forward. So just some technical analysis on the stock right now. The 20-day SMA, 1643, we're above that. The 50-day SMA, 1675, we are above that. And then if we take a look at the 200-day SMA, 2305, we still got a little bit of ways to go for there. Here's a broader scope on what's going on with the technical analysis. So trend and SMA. So short-term trend is neutral. Again, the 5, the 10, 20, and 50, we're all over those marks, and we're about to cross the 100-day moving average, which is great moving forward for us here, guys. So, 1-month performance up around 10%, 3-month performance pretty flat, 2-year performance up 159%, but the 6-month performance is looking pretty ass. I want to see this all the way green for us here. The next stock I want to take a look at here on ChartMill is Netflix. Guys, I think this stock could be approaching a generational buying opportunity. I mean, no one in the media space, I think, does it better than Netflix. And this stock has been getting destroyed, guys. I mean, year to date, the stock was $108 per share. It's $78 now. And if we take a look over the past year, what did it close at? $133 per share. It's at $78 right now. I bought 2 more shares today. I want to just wait to see where this downtrend ends. I'm buying slowly. I did get some cash in my big dog account. I sold some. I hold like JEPI and JEPQ, which is like a monthly dividend player. It's kind of like my cash reserve. So I cashed both of those in. I got around $15K in cash right now. I'm going to slowly start nibbling away at stocks I love. Netflix is one of them, right? The technical analysis, this chart is not going to look good at all whatsoever, right? But the earnings will be good, I'm pretty sure. And I just think long term, this is a great company. We're seeing it trading at some of the lowest overall metrics we've seen in quite some time, guys. So this stock, I think, is on the up and up. Again, PE ratio at 25. Over on Morningstar, kind of gives you fair value, gives you 1-star price, 5-star price. So the 1-star price of $124, 5-star price around $48. I don't know if we get down there. We're kind of right around fair value according to Morningstar right now. But I think the EPS growth, 46% over the last year, is crazy, man. Free cash flow of $12 billion. The balance sheet looks pretty good. I'm going to start looking at some of these financials. I always like to look at the averages, right? When we take a look at valuation, some of these financials, I like to look at the 5-year trend, right? Price to sales, current 7.41. So we're kind of coming right in line there. Price to earnings, the 5-year average is at 37.42. The current is 25.92. So we're getting a considerable discount price to earnings wise on this stock. Price to book is about the same as it's been. Price to forward earnings is still really cheap as well, 25. 5-year is at 31.49. The PEG ratio at 0.86 is crazy. The historical 5-year average is at 1.69. It's trading really, really cheap right now, man. Like anything under 1.5 to 1 is a good buy. It's under 1 right now for Netflix. I think this is a screaming buy. Could it go lower? Of course. It says Netflix valuation metrics show a significant decline with the PE ratio dropping from 36 in Q4 2025 to 30.36 in Q1 2026. It's even lower than that now. The forward PE is set at 25. I love that. Again, the PEG ratio, price to sales, is cheaper than it's historically traded for. Back in this time last year, June of 2025, we were paying 14 times sales. We're paying 7 right now. Cut in half, guys. I think it's a considerable discount that we really need to consider adding to a position. That's just my personal thoughts. Again, this is not financial advice. This is just what I'm seeing and then what I'm doing because of what I'm seeing. Total cash, I have about $12 billion in cash on the books right now. You got to love that. Total debt coming in at $16.74 billion, but the levered free cash flow over the last trailing 12 months, $25.99 billion, and the operating cash flow, the actual cash that's freed up, $12 billion. I mean, they could pay off this debt very easily, in my opinion. Short percentage of the float, 2%. Not a lot of people shorting this company right now for good reason, right? I do think under $80 per share is the accumulation zone. Down, does it get down to 50? I guess it could, but for me, I started buying in the low 80s, so now I'm just starting to ramp up my purchasing of Netflix as we move forward. Before we get into my last stock I want to talk about today, we'll just go over the overall market. I deleted MSFT. Oh, yeah, I had two of those bad boys. That's why I deleted it. Okay, so CoreWeave was up 9% today. SpaceX had a wild day. Yo, guys, paying this valuation for SpaceX is wild. Guys are wild if you're buying SpaceX right now, man. Not for me, but hey, if you bought it at 135, you're making some damn good money. But again, revenue of $19 billion with that kind of valuation, yikes. The market cap almost $3 trillion. Oh my God. Oh my God. I have no words. Interesting day, though, today. It shot up and then sold off the rest of the day. Peaked at 225 and then closed down. The low today, around $200. What does this say? No, 195. So it's going to be a lot of volatility. If we're looking up 6 months from now, a year from now, and this stock's under $100 per share, I would not be surprised at all whatsoever. So just be careful, guys, with this stock. Again, that's just my opinion. Another stock I really love, American Express. Guys, this is a really interesting buy to me right now. This isn't the third stock that I want to talk about, but it's hard to ignore a company that's as quality as American Express. If we look over the last year, the high was, what, 386. It has recovered nicely. Unfortunately for us, I mean, the low was down at what? 291. If you can get American Express under $300 per share, I think that's strong value moving forward. I think Revolve is a nice play too, down considerably from 52-week highs. I don't ever want to be buying heavy. I'll nibble away when stocks are like a bank stock that's at near a 52-week high. That's not for Jason. So Google, I was screaming at all my friends and neighbors and anyone who would listen to me when Google was $150, $160 a share. I was like, you got to buy Google. And people were like, it's really high. I'm like, no, it's not. And then here we are. 371, 52-week high was over $400 per share. So we made a lot of money on that stock. I did sell out of my position of Google just to be transparent. I would like to get this stock under $300. Then maybe I'll start accumulating again. But yeah, I'm just going over everything that's been cooking on my Red Wire is like a pick and shovel play for SpaceX. Right in the middle, the 52-week high was $26. It's the $15, $13 range now. It's been over the last couple of days. So a lot of these quantum stocks have gotten obliterated today. It's kind of how it goes. They're up huge one day. They're getting destroyed another day. That's kind of where it goes. Whirlpool is an interesting turnaround play. It's been a nightmare for that company on the stock market for sure. Tesla is traded pretty flat today. Microsoft and Tesla both down around 2%. A lot of this money is flying into SpaceX, and I don't think this ends well for anybody, but maybe down the road, but in the short term, yikes. Yikers! I would like to get Amazon under $200 per share. That's kind of like my buy zone for Amazon. I think a lot of the Magnificent Seven could see a little bit of a sell-off moving forward. We'll see how that plays out long term. But the stock I really like that I want to talk to you guys about is Salesforce. Year to date, the stock is getting destroyed, down 36%. PE ratio at 18.71. Seems pretty cheap to me, guys. Yeah, Salesforce is cheap, especially when you look at, okay, where is my chart at? There it is, guys. This is the EPS chart that I really like to look at year over year. Considerable growth bottom line wise. Looks pretty damn good to me. We take a look year over year. So the stock is down big, right? Earnings surprise was only 7%. The last, several quarters, it's been really good, right? But this one was pretty bad considering the other ones are in 20-30% range. But this company, year over year surge. I mean, the GAAP EPS, 52% expansion. The numbers look incredible, guys. Okay, so fair value is about $280 per share. Salesforce is $161. 5-star is at 168. It is below that now. It is in the 5-star buy range. I do like looking at these ranges on Morningstar. It's a pretty useful tool. Price to sales at 3.61 is not super high, but it's not super low either. It's not like a Netflix situation where it's under 1 and it's crazy. EPS growth 35% over the last year, which is amazing. $15 billion in free cash flow. Long-term debt, the debt is a little bit concerning for Salesforce. But I want to take a look a little deeper at the valuation. Like I said before, I do like checking out the 5-year averages. Price to sales, it's cut in half for what it's been trading at historically over the last 5 years. That's always an opportunity for me where I want to start buying. We see a price to sales cut in half. I like that. The price to earnings over the last 5 years, Salesforce was trading at 65 PE. It's under 20 right now. I think this is a great opportunity to get in on this stock. Price to cash flow, considerably lower. PEG ratio, about the same, what we're paying current as opposed to the 5-year average. But the PE ratio, woo, baby. I think that is super cheap. I do want to take a look a little bit deeper. Where's the Yahoo page? There she is. I think this is one of the easier ones for us to read, traders. So if we go into statistics, we can take a little look under the hood here. Market cap touched 260 billion almost. Now it's at 134. Holy shit. This just seems like a deal to me. Enterprise value is more than the market cap, which is crazy for a big growth company like this. The forward PE is at 12. 12. That's craziness. The growth is, with forward PE, it's been cut in half. I mean, PE, what you're paying for, has been cut in half. It was at the 24. It's at freaking 12 now. Trailing PE, which is the trailing 12 months, was at 42 before. It's at 19 now. Price to sales again. Price to book is about the same, but holy shit. Trading considerably cheap. Almost $12 billion in cash. Total debt, $42 billion. Not awesome. Okay. Operating cash flow, $15 billion. So the debt is serviceable, but it's going to take some time to chip away at this debt. But you're paying for the growth and what this company can be a few years down the road. If the debt scares you, I understand. That's probably one of the contributing factors on why it's trading so cheap. But if this growth continues at these rates, 20, 30, 35% of what it's already doing, I mean, it's going to be able to shred through this debt very easily, in my opinion. The short percentage around 8%, a little high for sure. But they've shorted this company down to half the valuation that it once was at. So for me, to continue to short this company that's growing like this is risky, to say the least, man. Definitely operational tailwinds look pretty good. This continuous margin optimization, reflects massive tailwinds from corporate workforce restructuring, aggressive capital returns via a $25 billion accelerated share repurchase program. Woo! So they're buying back shares. The valuation has been destroyed. That sounds like a lot of opportunity for investors to come in and take advantage of some of this opportunity here. I like Salesforce, man. So SoFi, Netflix, Salesforce, definitely some companies I'm adding to my basket in my portfolio, to say the least, guys. I do think that this company long term is going to print for us. Straight up. I haven't opened up a position in Salesforce yet. I got to free up some capital. But I do think our account, year to date, not great considering SoFi's been cut in half and we're still only down 8%. That's how great we've been doing in other aspects of this portfolio, I'm highly concentrated in SoFi, around 30% of this big dog portfolio. I am a little overweight in SoFi. I want to get it to around 25 to 20% over the next year or so. But if the stock keeps going up, it's going to be harder to do that. But if it gets back over 30 bucks, I will take some shares off the table, to be completely transparent, right? So over the last 2 years, we're up 140%, over $115,000 in this account. If you want to see all my trades, what I'm doing, why I'm doing it, and my overall kind of thoughts on where the market could potentially go, make sure you hit that like button and subscribe to the channel, guys, and we'll catch you on the next video. Peace.